Okay. I guess we can skip presentation. Done pretty well. So yeah, basically we're gonna talk today about liquidity and how we see the market today. But like maybe like in a few words, how do you like describe the current market environment here in crypto? And as a question to Andy.
I think it depends on who you are, right? If you're a retail investor, it's a pretty scary environment to be in right now. There's like not much liquidity across a lot of the markets that are commonly traded. I think if you're an institutional investor, then you know that kind of the environment that a low liquidity situation creates can actually present opportunities for arbitrage and so on. So I think if you're a retail investor, terrible. I think if you're an institutional investor, it's actually pretty good.
And maybe like Roy, like what was the point here on Binance and current environment today? Like how do you see it?
Especially on the retail side, indeed, it's more of a tough time. The retail investors have been hurt since the crash that occurred in 2021. During that crash, we've seen both bad actors and unsuccessful business models failing the industry. And that's leading to harm for consumers. And they heavily need consumer protection through regulation, which I think was the main priority for the past year. And I do think that we see people and politicians catching up on that.
Thank you, Roy. So I mean, we've seen like a lot of challenges in a lower liquidity environment. What type of strategies have you guys implemented at Bitstamp, for example? And to counter maybe like the current environment?
That's a very good question, thank you. So definitely the first and definitely the most important one is to have a very high quality market makers on the exchange, like Keyrock, for example. That's a very necessary step to take. With Bitstamp, the world's longest standing crypto exchange, we've been working with all the key market makers in the space for a long while now. So they are the ones really making sure the liquidity is there at any step of the way, right? Especially more on the long tail assets. Believe this is super, super important for retail to be able to trade at all times. And also for the execution of orders to be optimal. So meaning the prices don't go below what's available on the market overall, especially when it comes to bigger orders. Very important as well is to have a good product offering, enabling capital efficiency. This is super important for any more sophisticated retail player, as well as for institutional corporate clients, to really take advantage of all the movements on the market, especially with the sideways market like we're seeing right now. So definitely important to mention. And yeah, at the end of the day, as my colleagues already mentioned here, customer protection, it's an important one when it comes to everything trading. So that's something all the venues should be super careful on how to handle.
Yeah, and I can definitely second that on the importance of market makers and getting the actual liquidity on the platform. But centralized exchanges also have the opportunity to filter out certain projects with the lower liquidity in the first place. Right, so every centralized exchange has a listing policy. This listing policy may differ between exchanges on what they allow and what they do not allow, but at Binance, one of the things that we always try to look at is the size of the initial project, right? So what's the community? Does it have enough support from initial investors? Do they already have trading volume elsewhere? This is hard to determine with an ICO or an IEO on an exchange. But it's definitely one of the filters that we try to look at. If there is already traction, you can avoid the low liquidity in the first place by allowing only those projects or filtering those projects on the platform.
It's really true, actually, and I think it kind of goes beyond that and into like trading protocols as well. So I think the low liquidity environment that we're in right now is totally predictable. Like the entire world is like risk off in terms of trading risk assets. There's liquidity contraction across pretty much every major economy. I think if you take some lessons from traditional finance, in a central limit order book environment, that's really, really tough. So then what you can do is you can innovate and bring different trading protocols to retail investors. So you can open up the OTC market. You can provide simple OTC products to clients so that they can actually RFS for price. They get certainty of price, they execute, and it's a much more friendly environment to trade in when the market's like they are today, basically.
Thank you. Good insight. And maybe like coming back with Roy, I mean, you touched base a bit on that. In the low liquidity markets, you're going to see a bit more of potentially price manipulation or fraudulent activities. How do you guys engage at Binance to counteract that kind of stuff?
Yes, so taking one step back and looking at traditional finance versus crypto, one may argue that everything in crypto is low liquidity in the first place. But within crypto, we make different distinctions and we have different benchmarks of what we call low liquidity. Generally spoken, for us on the platform, it's not so much of a general issue. We do have some smaller coins and we do try to incentivize or ask support from market makers to provide more liquidity there. So we actively try to solve that issue. But outside of the platform, we have less or no control over what really happens, right? And that's where you see mostly the scams happening as well. On Twitter, you will see influencers shilling coins because they've bought in. And once it has a slight bump, they will immediately sell all their holdings, right? And that's one of the market manipulations on a small scale that you see. But that's only possible when there's not enough liquidity. If people start buying and selling and placing orders, you cannot move the market that easily. So they need a very low cap. You can literally see the influencers asking for new projects with the market cap below $10 million, for instance, that they want to get involved in and partner up with. This is quite a bit red flag for us.
Maybe I have some additional interesting insight to share here. So basically, what we've seen, obviously, have a lot of early adopters on our platform, still trading very large amounts. And we have seen also some activity of unsophisticated players that are not just used to do a very big orders. So they do it kind of unsophisticated manner, which could obviously also move the market, right? And lead to market manipulation. So in regards to that, with Bitstamp, we actually established market surveillance team already back in 2018, so kind of following best practice from traditional space. Our team is super experienced, coming from traditional space as well, but already pretty native in crypto, and using NASDAQ technology behind in order to spot any kind of manipulation going on. So that's why also some of the bad players that are no longer existent actually didn't do much trading at Bitstamp. And saying this, you know, we kind of as exchange protected our customers by implementing some of the most sophisticated algorithms in order to stop that kind of behavior. Of course, this is easier said than done because at the end of the day, you don't want to prevent players from trading, right, in normal manner. So that's kind of something we are working on hard in order for these mechanisms to make sense and to protect customers. But at the end of the day, also to prevent market manipulation and protect the rest of the customers on the platform.
I think there's some really simple steps you can take right up front as well that don't need any sophisticated monitoring. So KYC, know your customer. A lot of people really forget what that means, okay? So you need to understand who the client is, where they're trading from, and why they're trading crypto. If you can do that, and you can keep a really tight monitor on who the clients are that you have on your platform and that are doing business with you, then that helps to mitigate a lot of the problems in terms of market manipulation as well.
Thank you for that. Maybe coming to the more recent activities in the US and the SEC crackdown. That's the hot topic. I'm sure a lot of people are interested about that. Maybe, Andy, what's your opinion on the recent crackdown? And you see that was it a threat, opportunity? How do you guys manage with that?
Look, I think Kevin gave a great synopsis of what's going on in the US before us. Like I think everyone knows the story there. The SEC are obviously, they are regulating by enforcement. That's how the US do it. I think in Europe, regulation is much more collegiate and collaborative. We saw that with the implementation of MiFID II. ESMA worked across all of the member states and took a long, long time to implement it. But I think in many ways got it right. They're doing the same thing with MiCA. They're creating harmonization across multiple jurisdictions. That's really, really difficult. It's like 20 odd countries, 20 odd regulators that you're working with to do that. I think in the US, look, I think the crackdown is going to continue until really the perceived flush out from at least a political level, like Elizabeth Warren, any of the kind of political administrations really get to what they want to do, which is get proper control of the market.
Yeah, I don't want to be that pessimistic there.
Well, I'm not pessimistic either. I think it's inevitable. It's fine. We'll all get through it, and we'll all be still trading crypto in 10 years' time. So it's cool.
Yeah, but it's funny to say, like we've been basically regulated by NYDFS since 2019. So having been licensed there, and having more than 40 licenses throughout the US. So pretty active there, but only on the exchange venue. Have always been super conservative on what we do. Also in terms of asset listing, we were never of a way, let's list something and maybe pay a fine after. But it's true that the regulatory environment is a bit less predictable in the US. And funny to say, like 5 years ago, we were like, oh, a few more months and we'll have clarity, right? So I really don't want to say that again. But yeah, saying this, I still believe that US market, one needs to be a bit more careful what to do there. The US will need to move forward with some of the decisions in order not to stop innovation there, which I certainly hope and believe this will move towards to. And with Bitstamp, we are super happy, to expand further in the US, given our regulatory footprint. But needless to say, also, our home being in Europe with 65% of the revenues coming from here, also very good opportunity to expand further in Europe.
Yeah, so to bring it indeed back to Europe, we do see a lot of opportunities over here arising from the uncertainty in the US. You see more multinationals headquartering or focusing on European markets. Big companies are moving to the UK and France quite intensively. And I do think that due to the MiCA regulation, even though it's not fully there yet, it doesn't have all aspects of crypto in it, but at least it has a definition, an initial definition of what crypto is. If you do not have that definition, it's hard to regulate the space with much clarity in the short term. And then to link it towards the subject over here with the liquidity, a few interesting things might happen. One is, if you look at traditional finance, they are all heavily regulated already. So they require a regulator looking into your business and auditing you before they can engage with you as a business. So we do see it's tightening up in the short term in terms of banks willing to collaborate with crypto firms in general. But with the MiCA license, this will open up a lot of liquidity and traditional players towards crypto as well.
I think as well, like I mentioned MiFID II earlier, if you look at the trading volumes in Europe, for example, right? So derivatives trade about 4x what spot trade today. At the end of the day, a crypto derivative is a financial instrument, okay? Financial instruments are actually covered under MiFID II. So if you have a MiFID II trading venue license, you can operate within Europe, you can provide the same protections to investors, whether it's retail, institutional, that you can do with any other traditional finance asset, right? So like, I think MiCA is probably not going to be the holy grail that people really think it is, or it doesn't even need to be either, like when you think about the true amount of traded assets out there in the market.
Maybe looking at more like with the current environment in terms of liquidity and the low liquidity, do you think it's going to slow down the adoption of cryptocurrencies, both on the retail side and on the institutional side? Maybe Eva, what do you think of that?
Well, in terms of, I would say liquidity is definitely one of the drivers, but until, MiCA is implemented, if we look into Europe, like we are seeing a lot of increased interest from asset managers, hedge funds, family offices finally coming into crypto, but still, looking for some more regulatory clarity there. So believe this will actually drive the next wave of adoption and kind of changing client profiles as we see them today. But yes, overall, like, everybody's used to different market environments, so definitely low liquidity environment doesn't help a lot. But I believe there's always a way for players that want to enter crypto to find a way on how to do that, right? We mentioned OTC, we mentioned derivatives market, which are important in this environment. And yeah, seeing more and more adoption there, definitely.
I agree with that, and I think that I think if you back to what I was saying earlier about institutional investors, right? Institutional investors will just basically deal with a low liquidity environment in crypto the same way they would in any other asset class. So they build trading strategies around that. They source liquidity from people they trust. They do participate in environments like OTC and so on. Like if you're an institutional investor, what do you actually want? You want to know that you're not going to get a license taken away from you by a regulator. So you want to know you're doing something you should be doing. You want to know that your underlying clients have actually given you the mandate to invest in that asset class. And at the end of the day, you want to know you're not going to lose your money as well through anything other than market risk, right? So I think the environment is still great for an institutional investor to get in and adopt crypto and trade there. And moreover than that, it's quite embarrassing if you're a money manager right now and you're not getting a 4 or 5% return, because I could go and stick my money in a money market fund and get 5% right now. So where's the alpha coming from if you are being paid, the 2 and 20 to look after someone's money? I think on the retail side it's tougher, but then you can, to Ava's point, provide solutions like OTC products, that do protect retail investors there.
And Roy, do you see the same shift at Binance in terms of retail, institutional clients and the flow? And do you think it's going to stay the same, or do you think it's going to move towards more potentially retail or institution?
So we tend to focus ourselves a bit more on the retail side from Binance. So the main vision is to service as much clients and generate as much adoption. So for us, the B2B side is more a facilitator to get the users, the retail clients in the end, right? So we need partnerships both with payment providers as well as partners where we can integrate our products just as Binance Pay so people can pay with crypto. We have a Binance card, which is a collaboration with Visa. So it's basically a Visa card that allows you to spend your crypto. It converts your Bitcoin, for example, into fiat, and the merchant receives fiat. But we are doing all these things to get more users, more usage of crypto itself, and therefore drive more adoption.
And now, everybody's trying to see exactly when the next bull market is going to be, right? And what would be the catalyst for it? Do you think it's going to be first very soon? Or basically, what are your prediction, Andy?
I think crypto is so correlated with the broader market environment now that actually the reality is that it's going to be a tough couple of years still. Right? I'm not a pessimist. I'm actually an out-and-out optimist, right? So if you ask me later, privately, I'll be like, the next bull market's next week. But I think if I was to put like a realist slant on it, then I think it's going to be a tough environment for anyone to invest in the next couple of years. It's just where we are. You can't have such a huge amount of quantitative easing, such a huge amount of inflation in the underlying economy, and then a massive liquidity contraction that we're having all over the world right now, and still expect to have anything other than just sideways price movement in any risk asset. That's the way it is.
And maybe Eva, the bull market is not there, but do you think the market to stagnate, or do you see it more still going potentially lower than what we're seeing today?
That's a hard question, would say, especially with Europe just entering official recession 1 hour ago. So very much agree with Andy here. But at the same time, also, I think probably the next wave of adoption will be much, much greater compared to anything we've seen so far, but it might take a while to get there. What we're seeing a lot is really increased flows from payments and remittances. So that's something really interesting to note, especially in emerging markets. So I think when more companies will be out there and a bit more regulatory clarity, at least from certain countries out there that support crypto, this will really be kind of a catalyst for the next way of adoption. Very much see that. And to be honest, like we have never seen such big flows on our exchange coming from this specific source. So that's really growing day by day, even though that liquidity, environment and overall trading environment is really not the most ideal right now. But yeah, that's definitely an interesting trend we are observing.
I think that's a great point, right? Because if you can think about crypto in many different ways, right? And Kevin made the point earlier about moving money from Switzerland to Belgium or the other way around, okay? So like, on the one hand, if you're thinking about crypto as a speculative asset, then bear market territory. If you're thinking about real world use cases and actually being able to move funds, like, if I'm working abroad and I want to send money to my family, I don't want a bank taking 2% off me, of my hard-earned money to get it to the people who need it, right? And so, like, Ava's totally right. Like, the whole payment service provider, the whole remittance, crypto on-ramp, off-ramp is really booming at the moment. And I think that's a really positive thing across for digital assets as a whole,
And especially in high-interest environments, right?
Yeah,
so,
totally.
Inflation and so on.
Yeah, and we try to stay away from looking into the short-term price fluctuations at Binance. But what we generally do see is the innovation happening. The people that continue building, especially in the bear markets, a bit more in the background, but the innovation is still progressing quite intensively. So we do see more innovative products, more regulatory clarity, more licenses being acquired by more parties in the industry. So it's all different reasons why it should work better. The users, it's an easy number to increase, relatively easy spoken. It is still increasing. So what we try to do is not look at the short-term price and the price fluctuation, but look at the entire industry. The value needs to derive from the utility and the usage, and both of those are definitely increasing.
Dave, when do you think it's going to be the next bull market then?
I mean, it's different, all right? I mean, we're market makers, and we just provide liquidity for you guys, all right? So the next bull market is something a bit different for us. I mean, as we provide the market making, and it doesn't really matter for us, right?
Yeah.
Volume, of course, does matter. By the end of the day, I mean, as a market maker, we're delta neutral. Always don't take long position, don't take short position in any of the project that we work with. So yeah, I mean, what we're gonna see potentially like a reduced number of participants, exchanges. We've seen that recently. Even in Belgium, we've seen that a recent exchange has closed shop, right, due to the lack of liquidity. So that's what we're gonna maybe see. And this is a talk that we've also seen like every year, like the concentration of liquidity among certain participants. But that's might accelerate it. And the next bull market, I mean, I think Mika is gonna hopefully drive more traditional player into the markets. But that's end of 2024. So we'll
I mean, like, I think you guys are really well positioned, and I'm not just saying that because you invited me here and I'm sitting on your stage, but like, like I come from traditional finance world, from FX, right? And so market structure to me makes sense from a market maker's perspective. It will continue to be a difficult environment to run a central limit order book. And I think as market structure evolves, I think market makers that can have like, multiple connectivity across platforms, have an OTC offering, are actually really well positioned to compete.
Yeah, and maybe what Dave mentioned is also calling for a little bit of consolidation in the space, which might not be too bad, right? For really strong players to emerge and really strongly support all the different clients out there. And similarly for new projects arising, right? VCs being much more selective these days, but just had a really, really good discussion with one of the most knowledgeable US VC yesterday, and they basically said that there's much support for good projects right now, and really believe that some really strong players will emerge after this bear market.
Yeah, the bear market is often a filter for the sustainable and unsustainable business models, right? So what happens in the bull market in a highly speculative phase, the Bitcoin dominance is still quite high. So the Bitcoin price goes up due to the speculation and the FOMO that people try to step in. But what we see is even the low caps, the below top 1,000 caps, they will increase in the same ratio, if not even more than Bitcoin. But that's not the actual utility and usage of those low caps. That's purely based on speculation. So it's quite easy during a bull market to either gather funds, get liquidity, increase your price, make some profits, but it's not a sustainable way of doing business if you need a bull market to survive. So indeed, it's good that the market comes in cycles, that flushes out unsustainable business models. It will filter the industry a bit more and will make people more critical towards projects as well. And then on the outlook, it's no guarantee, it's never a guarantee that prices will go up, but there is an historic trend quite visible with the Bitcoin halving. So I'm curious to see how the Bitcoin halvings will align with Mika coming into play and the developments happening in the US right now. It will be an interesting 2 years at least.
Yeah.
Well, thanks a lot. I'm sure a lot of you guys have potentially had questions for them, opening the Q&A potentially and see what kind of insight you guys are looking for.
You got Mike?
This is slightly awkward because the question was for Roy. So I'll try and ask a different question. David, you mentioned, I think, in fact this was also Roy, business models being unsustainable if they rely on bull market profits. With that in mind, what advice would you give to any business to keep their business bear market ready or relevant?
So the business model just has to make sense, right? If you you need to have a clear business plan that creates profits for the usage of your platform. You need to calculate all the costs, and sometimes what we've seen in the bear market is that the success of the business model was really dependent on the price to increase. If it gets traction, then this will happen. But especially in DeFi, you need a business model that works from the start, basically. You cannot start with a huge investment, make back your money, give huge discounts. You need to stay competitive from the start. It needs to make sense from the start as well.
Thanks.
I think there's like some really basic first principles of running a business as well, which is like keep an eye on your costs and surround yourself with good partners. Like I think if you do that, then you can ride out a really tough market environment.
And
Stay away
again,
from
like
businesses that rely on market dynamics.
yeah, but then again, like bear markets are amazing to build, right? And that's where projects should really take advantage on building fast, delivering a lot of products, and then be ready for the next cycle.
And talking about bear markets again, sorry to ask another question, but Roy, right at the beginning, you mentioned Binance filtering out projects for certain reasons, i.e. having a policy on whether or not you list them. How often do you delist projects? And by what metrics do you decide to do that?
So the listing team actually is quite an autonomous and secretive team within Binance and does not fall under my direct responsibilities. But I do know a bit about what they, for instance, look at. So the listing policy is quite strict. 99% of the projects that apply to be listed will not be listed, right? So there are many projects. You can assume that most of them in the existence apply for a listing on the major exchanges that are out there. And we currently have about 350 coins. And then navigating in the low liquidity environments, what we see is many projects stop innovating or lose community, or there was an exploit that should have been prevented. I mean, all those reasons lead to less interest. That's the main reason why the most projects get delisted. One thing that we've implemented recently is the innovation zone. So right now, since about a month ago, when we want to delist projects due to the loss of interest or the decrease of innovation on their front, not fulfilling the roadmap that they envisioned, for instance, we will put them in the innovation zone as a sort of warning, like this is the last step, make sure to get traction or improve your project, and you will stay on the platform.
Like a business margin call.
Maybe I can add some color to this. I was actually working on the asset listing framework internally. A few years back, we have asset listing framework vetted by European regulator as well as NYDFS, working super closely with them on this. So It's actually a fairly clear set of requirements when it comes to market, technology, team, traction, volumes, regulatory, legal, and compliance, right? So it's fairly clear what you're able to list and what you're not able to list. So Bitstamp being slightly more on the conservative side, but yes, of course, in line with that, we did quite some delistings as well, especially in the US. This is typically more in line with some regulatory feedback. And yeah, a bit less on the not gaining traction because we typically list more projects that already gained some traction on the market.
We've done some delisting recently, and actually the primary reason wasn't falling out of love with projects, because actually if you do your due diligence right in the first place, 99 times out of 100 you get it right. For us, it was about capital efficiency, so protecting our market makers who are deploying capital to trade these products, right? So if the trading volumes aren't there, then why would we expect any of our partners to actually stump up their capital in a really high interest rate environment to actually trade those coins? And then I think, secondly, is from a consumer protection point of view as well, because what you then find is you end up in these very, very low liquidity markets where you get some clients who unfortunately maybe don't understand order types. They'll stick in a market order, they'll rip through the order book, and these are real people who lose money. So like I think you have to think about it from that perspective as well.
That's why you also have a need for market makers, right?
Exactly.
Any other questions? No? Well, I guess that's it then. Thanks a lot.
Can we ask when the next bull market is of the audience? Yeah.
Next bull market?
Yeah. Hands up for 1 year. Oh God.
So just one.
Hands up for 2 years. Hands up for 3. All right.
A lot of
It's
bears.
2 years.
A lot of bears
2
here.
years. There we go.
Is there anyone that would say it's over for crypto? I'm just here for the fun of it.
Love that.
That's good.
But since the traditional asset class is declining a little bit, and we are on the brink of almost collapsing, should crypto survive, or could it be the actual solution? I think that's the real question here. So
That's a really good point.
Yeah, it's a great point. It kind of comes to what Kevin was talking about in terms of tokenization of real world assets. So like, we're constantly thinking about like how do you use digital assets to democratize investing, and like that's pretty much why we're all here. That's why we love crypto. So like I think in this bear market, the more we continue to do that and think how we do that, then maybe we do stand a chance of all having really good businesses in a few years' time.
Well, thanks a lot for all your insights, expertise, and hope to see you guys next year here again.
Thank you, Dave.
Thank you.